Hi, in this video I'll be taking you through how you can make your analysis, that is determining the structure of the market, and I'll be showing you two ways which you can determine the structure of the market. First is by using your plain chart, which is identifying the structural point, which is your higher high and your higher low. And then secondly, how you can use the Bollinger Band, which is this Bollinger Band, period 130, deviation is 2.0, in order to determine your trend as well. And then I'll be helping you to identify your points of interest. What is point of interest? Point of interest are those zones with high probability trade entry confirmation. So I'll be taking you to how you can identify each of these zones and how you can take advantage of it. And also I'll be sharing with you your entry confirmation. When price return to this zone, what do you do? What are those entry confirmation? What should be the trigger? And I'll be showing you two methods of entry confirmation. One, using the break of structure on a lower time frame, and as well as using a candlestick formation on the 1 hour time frame, and how you can set your effective stop loss. So, and I believe that this will change your trading in no small way. If you are yet to subscribe to this channel, please do well, hit the subscribe button, turn on your notification bell so you'll be the first to get notified when we upload our next video. If you are yet to share this video, please go ahead to share so that others can benefit, and ask your question using the comment section. So this is GBP USD and this is 4 hour time frame. So what do we begin with? We'll begin with identifying the structure of the market. So we will be doing this first without considering our Bollinger Band. So how do we do that? When you look at this, you realize that price is in an uptrend. Let's look at the recent price scenario. In recent price scenario, you will realize that price is giving us a higher low. Here is our higher high. Here is our new higher low. And here is our recent higher high. So whenever price is giving us a series of higher high and the higher low, it simply means that we are in an uptrend. Now that we have determined our trend, that is using the structural point, what is the next step? The next method is by using our Bollinger Band. Now this can be easier for you as a beginner. And how do you do that? You will pay attention to the middle Bollinger Band, which is this middle Bollinger Band line, and it simply means that when price is trending above the middle Bollinger Band, you are in an uptrend, and when price is trending below it, you are in a downtrend. And this is depending on the time frame you are viewing it. So if you are viewing it on the 4 hour, you follow it in that way. And if you are viewing it on the 1 hour, on a daily, so you can see that price has been consistent above the upper Bollinger Band for a long time now, and that signifies that we are in a bullish market. So in this scenario, we have identified our trend using the two methods of trend identification. More details videos are on this channel. What is the next thing? The next thing is for us to determine our point of interest. Now, if you look at this point critically, you can see that in this case, price returned to our middle Bollinger Band. One of our point of interest is the middle Bollinger Band zone. This middle Bollinger Band, we are treating it as a zone. What does that mean? It means anything around this perimeter belongs to the middle Bollinger Band. So we are not treating the middle Bollinger Band as a line. You need to have that in mind. So we are treating the middle Bollinger Band as a zone. So when price comes towards our middle Bollinger Band, is one of our points of interest. So for instance, in a continuous uptrend like this, when price pull down to the middle Bollinger Band, we'll begin to look for an entry confirmation, because this middle Bollinger Band now is serving as our point of interest. So let me mark out the zone this way. So what do? We will move to our 1 hour time frame, and then look at what happened on this 1 hour time frame. Remember, we said on our 1 hour time frame we will be using a candle formation, and if you look at this incident happening here, is a perfect one, and we always say we need a divergence in order for us to validate our entry. So here is one of the entry, and if this entry, you did not take this entry, here is another entry. You can see here, this is a divergence, and we said whenever divergence happen in the direction of the trend, it shows that that is the end of the pullback. The trend will now continue in that direction. So you can see how simple you would have made this entry, followed with this bullish candles formation. So that would have been your entry, and it is as simple as that, following the point of interest of the middle Bollinger Band. Now you can also do this. Remember, I said I'll be showing you how to make entry on 1 hour and also on the lower time frame. So let's look at 15 minutes and see where is our entry for that trade. Beautiful. Here we are on the 15-minute time frame. So now on the 15-minute time frame, you can make this entry based on break of structure. And how do we see that? Let me show you now. Price is making what? A lower high. This is a lower low. This is a lower high. This is a lower low. So what happened? Price push up and break structure here. And so immediately we had that break of structure, we'll begin to look for a buy opportunity. So you can indirectly now pick up your Fibonacci and mark your range this way, and afterwards let's see what happened. We have our range being marked out here beautifully well, and then price pulled back to 50% of our Fibonacci and gave us a series of candlestick formation, and that is our trend continuation. So you could have bought there, and that is entry based on break of structure, price retest, and then we continue to the upside. So that is exactly how you can take advantage of that. And if you are using a break of trend line, let me show you this. You can see that on a 15-minute, this is your trend line connecting the structural point. So obviously price break, this is a retest, and we are up to the upside. So that is exactly how you can take advantage of all of this. Now let's move back to our 4-hour time frame. Remember, I've stated earlier that I'll be showing you how to identify your point of interest. So we have identified one point of interest, which is the Bollinger Band. Other point of interest is our order block. And then we said one of the characteristics of order block, a valid order block, is that it will take away liquidity. So the liquidity of these zones were taken by this movement of price. And then we said another one is there should be a fair value gap, which is an imbalance. So look at here to here, there is an imbalance in that zone. So if you are not conversant with these terms, you can check out the videos on the channel on how you can identify imbalance or fair value gap. is available on this channel. So now you can see that here now we have an imbalance that was marked out, and then we also have our order block. Obviously this is our order block, and then we have our imbalance, and then price did it. You can see that price went up, take away all of this liquidity, and then come back to mitigate this particular imbalance. So when you now move to your 1 hour time frame, beautiful, you can see now, you can see how price went, and then price returned into this imbalance. Now look at your confirmation on the 1 hour. This is a divergence. Look at it. This is a divergence, and this is a bullish pin bar candle formation, and that could have been your entry. Very much perfect and straightforward. So that is exactly how you would have been in that trade. Okay, so these are very much easy, and these are things that you can take advantage of. Alright, so price did not mitigate the order block. Price only fell into this imbalance and then push to the upside. So subsequently price can decide to fill the order block before making a higher high, and if it breaks through this order block, automatically then it becomes a break of structure, and then we'll be looking for price to retest and continue sell to the downside. And this entry is traceable all the way to 15 minutes, just as I have shared it earlier. You will find all of this entry. You can see it on 15-minute price returning to that zone. And then here is our divergence. So with this divergence alone, you can make entry with a break of this trend, and then price is on its way to the upside. So the process is very much simple. You can see this. Okay, this is a lower high and a lower low. So here, this is a break of structure on a 15-minute. So what do? You will now look for a fair value gap or any of those points of interest in this zone. So here we are having a typical order block. Did price retest the order block? Yes. You can see that price retest the order block in a very smart way. Do you see that? Price retest this order block, and then look at this divergence. Let it be clear. This is a divergence. This is a divergence. It retests into this 15-minute order block, a sniper entry, and that is massive. So use is how you can take advantage of all of these parameters together for your own favor in order for you to become profitable. So there are other points of interest that you can identify, but for this illustration we only have another block, we only have a fair value gap. We didn't have a smart money cube. So you can look at the videos in the channel where you can get ideas on how to identify the smart money cube and how you can make your entry using the smart money cube concept. Thank you for watching this video, and this is your first time, please do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified when we upload our next video. You can as well join our trading group by clicking a link in the description that will take you to the Telegram group where you can be part of what we are doing. Thank you, and see you in the subsequent video.